Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you hybrid annuities and hybrid annuities fully explained. Right now, I'm creating this video in January 2016. So this is going to be the most current type of hybrid annuities out there. I know you've probably seen a lot of different videos that I have on my digital notepad, etc. Essentially, with a hybrid annuity, it's a type of financial tool, just like any sort of tool in your tool belt. You could place monies from, 401k monies, retirement monies, such as 401k, 403b, IRA, or you could do something as simple as cash accounts. When doing so, like a major reason, and I'll start off with an example. If somebody has their current monies in a 401k account and they're starting to near that retirement age, think of this 401k kind of like a bucket. So individuals were placing more and more dollars into this 401k bucket, and it would determine how large or how small this bucket was at the end of the day, at the end of the year, would be dependent upon the amount of money that they placed in and however well the interest rate that came back would credit into their bucket. So if someone's placing thousands of dollars into their 401k plans and doing that throughout the length of their working years, and the interest rate comes back negative, well, you could have $1 million bucket that's sitting there. If it hits a 50% loss in 1 year, you just lost $500,000 that 1 year. You can use any number there. You can use 50,000, you can use 150,000, whatever that number is. So what that does is it creates panic out there in the economic world, in the retirement world, for seniors, for retirees. It creates all that panic because you see this constant volatility, and you're seeing it every single day, every single month, every single year, where one day the market's going to be up, the next day it's going to crash down, and that person's going to have a freaking heart attack because of the fact that they don't know what's going on with their money. When somebody plans, and this is what I've seen successful individuals plan, it's usually they're setting it up, they're doing it on a very safe, consistent basis, and they're understanding what are the negatives, what are the positives, how can I decrease those negatives or eliminate the negatives altogether and only have positives, only have the power of compound interest in their favor. So an individual that has a 401k that has some of those concerns, they have the downward market loss. Obviously, the market goes down. That could happen in a year. So you could have gains happening for 10 years. That 1 year that the market wants to reset, that account could go down by the wayside. So you have that downward market loss, which is obviously a very large downside to a 401k that's involved with mutual funds, or an IRA that's involved with mutual funds. You also have fees involved as well. So I use the bucket theory, and I say, okay, think of it like a bucket. If you had a little hole in that bucket, you're going to start to see water or whatever come out of that bucket every single day, slowly, slowly, slowly. So regardless of whatever that interest rate is that's getting credited to you, that interest rate has to at least beat out the fees in order for you just to break even. So if you have mutual fund related fees, if you have administration fees, if you also have advisor fees, financial advisor fees, that's a large portion of it that are siphoning out that bucket, and therefore you have to now rely on a positive market growth to occur just to make that bucket whole. So these are some of the different aspects that I want you to be mindful of, because a hybrid annuity is not for everybody. If you're looking for max growth, risk, all that, don't even look towards a hybrid annuity. But a hybrid annuity is also an innovative product. You had annuity products out in the 80s, the 90s, that were very cut, dry, vanilla products. The hybrid annuities came out after they became very attractive after 2008. And reason being is because it's allow you to preserve your accounts, stop the bleeding, meaning stop the mutual fund related fees, stop the advisor fees, allow your accounts to gain with upward market movements, and anytime that the market goes down, you're going to be receiving 0% into your accounts year by year. So you have that safety aspect with the initial rollover and every single year that you have your money set up with that hybrid annuity. So if we're going off of that bucket theory and we say, okay, we have a 401k and this person is eligible to roll over their 401k into a specifically designed IRA contract with a hybrid annuity chassis over it, what are the benefits? Why would somebody want to do that? Now, a hybrid annuity is nothing more than a fixed index annuity with an income rider. The income rider, or any sort of rider, is going to be the large player there. Now understand, hybrid annuity, I'm not talking about variable annuities with income riders. I'm talking specifically about fixed index annuities with income riders, because that's how you stop the bleeding faster and faster. I guess my example would be with a variable annuity. All you're doing is now you're just taking a sword and slicing out the bottom of that bucket, because now the fees are astronomical. So that's why I do not like variable annuities. I constantly talk about me not liking variable annuities, and there's a large reason. It's because of the fees that are involved. With the hybrid annuities, you're going to have extremely low fees. Typically, the ones that we deal with are going to be between 0.5 and less than 1%, so maybe 0.95% in fees. And that's going to be about the maximum amount of fees per year if you're including that income rider to it. If you don't have the income rider, then it's simply just a fixed index annuity. So please understand that concept of it. Now, you have a lot of different players that entered into the market in recent years that they don't offer any fee at all. So you're never going to see an actual negative come out of your account. Essentially, it's as if you're rolling over this 401k into the IRA. After every year, if the market goes down, you're going to receive a 0% gain into your account, because obviously it didn't gain anything. If the market goes up, then you're going to receive a credit. You're essentially going to open up that lid, pour the gain inside. That's what your physical money is doing. It's averaging, it's leveraging that index annuity aspect, where you're just going to have those positive gains whenever the market goes up, not lose anything whenever the market goes down. So you could have that safe accumulation play, and individuals could be very satisfied with that. But time and time again, what retirement planning is about is somebody wanting to have that peace of mind to be able to live their retirement years with confidence by leveraging a lifetime income stream that would come to them. One of the most important ones that you always hear is Social Security income. If someone hits 62, they hit 66, or their full retirement age, whatever that is, they're receiving a lifetime income stream for themselves, or them and their spouse are receiving two separate payments of Social Security income. You could leverage your existing 401ks, retirement accounts, cash accounts, things that were essentially just sitting on the sidelines or sitting with risk, sitting with fees, and now you could preserve those accounts and create a type of personal pension aspect through those income riders. This lifetime income can get paid to you in a single life option, or it could get paid to both you and your spouse in a joint life option. Understand, if you're giving an insurance company, because insurance companies are the one that offer annuities, and a hybrid annuities at that, if somebody's given a single life only option, the insurance company can now give a higher income payment than a joint life income option. And a lot of people always question that. So why is that? Because it's simple math. Basically, if you have an insurance company that is leveraging their contract, giving a set income payment for one life, that's less risk on their books than when they're giving lifetime income on two lives. So there's going to be a less benefit with the joint income, but understand that you do have certain products that work very well for joint income, and other products that work very well for single life income. So those, maybe say single life income, maybe that's company A. Well, joint life income, the best company is company C. So therefore, if you have a joint life income goal, you shouldn't be going with company A. You should be going with company C and their product. So that's some of the things that we do here at a Fosse Financial Group, is we show you ways on how you can leverage your current accounts. See, first and foremost, if a hybrid annuity may even be right for your specific situation, your specific goals. Because if it's not, then you shouldn't get involved with any sort of annuity or hybrid annuity at that. So you have the single life income, the joint life income, those are maximized incomes. So when calling into the office, you say, okay, I think I might be interested in a hybrid annuity, and you'll be dealing with a hybrid annuity specialist. So instantly, one of our assistants will patch you over to a hybrid annuity specialist. We're available 24 hours a day, 7 days a week. And that individual is going to ask you questions. They're going to say, okay, listen, what is your situation? What exactly are your goals? And try to mold whether or not this might be a fit for you. There's many times that a hybrid annuity is not a fit, and it might be a different plan altogether. And this is why we're an independent agency, because we offer all the best retirement income plans on a national basis. So if you understand, okay, maybe it really does fit you perfectly, well then we go through something known as the Retire Sharp planning system that leverages your goals, and it goes through over 1,200 different products and scenarios, making sure that we could give you the top 3 recommendations off of the pros and cons of each, and then let you decide and let you be proactive with education, with understanding what would happen with your money if you go and you leverage this hybrid annuity over the next one, or you leverage a portion of your retirement dollars into a hybrid annuity or other types of retirement income plans. It's all about the big game of leverage. So in the past, when hybrid annuities first came out, you had amazing contracts. You had contracts that were giving perfect lifetime income on a single life option, on a joint life option, and everything was amazing. Well, since that standpoint, since 2008, 2009, what you're starting to see is certain restrictions on the lifetime income side. And reason being is because now the companies, they're starting to get smart. They're starting to realize, okay, well, interest rates are still low, so we can't necessarily leverage too high of guarantees. And then on top of it, you have something known as mortality tables that keep getting refreshed every couple of years. So that's why and what a mortality table does is it shows you at that point in time how long the average person was living. So like a male that's 66 right now, or a male that's just being born, what's the average lifespan that person's going to live, or a female, or joint life, whatever that is. So those are actuarial tables based upon mortality CSO tables you might have seen before. So if they're updating those CSO tables, it's showing that that people are living much longer lives than, just saying in 2016, people are living longer lives than in 1950. So they're going to now incorporate that data into their specific income guarantees. So that's very important. So you still have attractive offers out there, but now maybe out of the 90% of hybrid annuities out there, they're all garbage, and then you only have a 10% that's really, really good. Or out of that 10%, you only have a couple of different products that work out perfectly, and all the other ones will not. So that's one of the things that we really do with our planning systems is we help you decipher, first off, whether or not it's a goal that could be accomplished through a hybrid annuity, what sort of income will you be receiving on a contractually guaranteed basis based upon the claims paying ability of the insurance company, and whether you want to have a single life income option, a joint life income option, or you could even add additional benefits. Some people just like to have a safe accumulation play. Some individuals just like to have a death benefit play. Well, rather than the income rider, but now you could add a death benefit rider to it. So there's a bunch of different things that you could do to skin that cat. This could be done with both qualified monies and non-qualified monies. So if you sold a business, if you sold a house and you have cash, you can leverage a portion of that to throw into a hybrid annuity. So now kind of think of this now as it's a cash bucket, right? So you could go and invest that in mutual funds, invest that in stocks, bonds, where you could still have those different fees, you could still have those constant negatives, or you could roll it over into a hybrid annuity, which is essentially now a cash bucket. It's known as a non-qualified, with a hybrid annuity chassis over it. However, that hybrid annuity is, understand kind of the disadvantages, kind of understand some of the mistakes that individuals make with finding out one company, finding about this product, finding out about a hybrid annuity product, is throwing it in with the first company that they hear. It has to be, you have to tread lightly on the situation and make sure that specifically, with pinpoint accuracy, you're getting set up with the best plan. And that's one of the things that we do here at Afasi Financial Group. At any point in time in this video, if you found value in it, please make sure to subscribe to our YouTube channel, Retire Sharp, so you can have access to the most updated videos. And please call the number on the screen, 1-800-566-1002. Thank you so much for watching, and I hope you enjoyed it.